Good evening. Thank you for coming here tonight. My name is Neil Kashkari. I'm the President and CEO of the Federal Reserve Bank of Minneapolis. On behalf of the bank, we're so thrilled that you could be here today. So thank you for taking time out of your busy schedules to join us. I have the privilege this evening of introducing our distinguished speaker, who I'm thrilled to introduce. Before I do that, one quick thing is, these town halls are really important to us because they're a way for us to communicate directly with our community. All of you, our constituents, people we are here to work on behalf of. The reason we have a distributed central bank, most countries don't have this. Most countries just have a central bank in the capital of their nation. We have a distributed central bank because we are here to represent you, to understand what's happening in our district, the 9th District, and to bring these ideas back to Washington, D.C., and that's my job. Next week, I go to Washington, D.C. as part of the monetary policy process, and I'm going to be bringing back insights from the 9th District to Washington, D.C. So we're really appreciative of you being here today to participate in these discussions with us. Now, our speaker tonight is our distinguished chair of our board, Dr. MayKao Hong, who I've gotten to know. MayKao's regular job, when she's not chairing the board of directors of the Minneapolis Fed, is she's the president and CEO of the Wilder Foundation in St. Paul. Many of you may know Wilder. It's a world-class nonprofit organization that does great work in the community, serving children, serving women, serving adults in all aspects of life. And it's really, as I've gotten to know MayKao and gotten to know Wilder, it's a really important organization I think that we all in the Twin Cities should be very, very proud of. In addition to her work in Wilder, she's a board member or trustee of a number of different organizations, a real leader in the nonprofit community, and she's been recognized many times for her leadership, including most recently from the Girl Scouts of River Valleys as a woman of distinction. That's one of many different awards that she's received over her career, too many to list, but we're really proud to have MayKao as chair of our board. My experience with MayKao, I have to tell you a personal story, began when I was interviewing for this job, because she was on the board of directors. She's now the chair. She was the co-chair of the search committee that conducted a nationwide search, searching for a new president and CEO. And so I got to see MayKao, her leadership in action, and she's a very serious, determined, thoughtful, and intelligent person. And all of that came through in the very deliberate selection process that they went through. And I'm not just saying that because I like the conclusion that they reached, though I'm happy about the conclusion that they reached as well. But I'm going to wrap this up. You're going to hear from MayKao on what it means to be on the board of directors here at the Minneapolis Fed, what her leadership in the community means, what that brings to us. And then I know she's going to take questions and hear directly from you, and that's an enormously important part of tonight. So thank you all for being here. Really appreciate it. And without further ado, Dr. MayKao Hong.
It was very kind of Neil to give such a wonderful recommendation. I'd say that we're very lucky to actually get Neil here to come to the 9th District to be our president. And it's actually one of the most important jobs I've had as being on the board, is co-chairing the selection process, which I'll talk about later. One of the things that we always like to say before we start every presentation, especially as directors, is, the views expressed here from me are really my own and not necessarily those of the Federal Reserve Bank of Minneapolis or the Federal Reserve System. It's important to say because it's a large system and directors are volunteers. And we obviously interpret and work on the mission and provide governance responsibilities, but we're not the policy makers. We're contributing to monetary policy. I thought that tonight what we could do is talk a little bit about my background, because you're probably curious who are the Fed directors, what do they do? I thought I'd talk a little bit about the structure of the Federal Reserve banks, which is pretty special actually when you look at central banking across the world and central banks in general. And then the role of myself, or role of Federal Reserve Bank directors, and then I'm in a special role. I'm in the role of being chair of the Federal Reserve Bank, and that comes with certain responsibilities. And then, I thought I would talk a little bit about the president's search process, because many of us who are on boards of directors know that one of our most important jobs is to actually find the next leader. And that, became my job last year. So I thought I'd talk a little bit about that. And then finally, there are questions that you probably have around governance and just the Federal Reserve System in general. And so we're going to spend some time helping to answer the questions you might have. And I'd just like to thank all my friends and people from the Wilder Foundation and the Hmong community in particular, and those who are fans of mine who showed up to learn more about what does this woman do otherwise? I mean, isn't it enough that she's running the Wilder Foundation? So anyway, I thought I would tell you a little bit about my regular job, because the people who sit on the board of directors here in Minneapolis are real people, and we have other organizations that we are leading. So my regular job is, well, I'm the president of the Wilder Foundation. And the Wilder Foundation is a nonprofit organization that's in the community, working to improve and transform lives in St. Paul, but really beyond. Wilder is a locally based organization that has statewide and also national influence in some of the work that we're doing. And it's because we're innovators in human service, and we provide thought leadership to improve people's lives. So we've been around for almost 110 years, so older than the Federal Reserve System. We have a few values, which I have to say are the ones that I live out or try to live out inside the organization all the time. And that's to be responsive, which is if the community is changing, then we should be too. That diligence and attention to meeting community needs is really what has defined the Wilder Foundation over time. Innovation is a value, which is, fail big, or go home. And actually, we're in the middle of budgeting right now, and I just had this conversation today with one of my directors, which is if we're not taking enough risks to change, then we're probably not doing our jobs to meet the values of the organization. And then effectiveness. This effectiveness value, which is what's our end goal and how do we get there and what are we evaluating in order to get there, is actually what built up what we now call Wilder Research. So Wilder Research is an area of the foundation that got created because we had this effectiveness value. A few things long-term, we call them our aspirations, are really that children and families have what they need to achieve their full potential. That means by all appropriate means and do whatever it takes. Community services for aging. At the end of life, maximizing people's quality of life because they've given a lot to us is something that's highly important to us. And then finally, community research and leadership, which is really about residents and leaders being engaged and informed in creating solutions to address vital community issues. And because we do provide community research and leadership services, and we do this in the community all the time, when I was asked to become part of the Federal Reserve Bank to be a director, I said yes, because we're people who build human capital. And human beings, as you know, are one of the most important pieces to building a strong economy. So a few facts about Wilder for those of you who don't know, and then I'm going to move on to my board role. Every 2.5 miles in the city of St. Paul, there's a Wilder staff person or volunteer delivering a critical service of some type for the populations that I'm talking to you about. We put out about 150 research reports every year, and at any given time, we're working on 300 projects to improve other people's lives and to improve organizations and to improve ourselves. We serve about 10,000 people, but we touch about 40,000 people on top of the 40,000 who actually convene at the Wilder Center to actually build social capital. And that's really, really important because if we don't connect people to things that are meaningful, each other, institutions, services, we're not living out our mission. So public service has been a really important part of my life, not just at the Wilder Foundation, but overall, because I truly believe that we're stronger when we come together and we identify critical issues in the community and that we serve in whatever capacity that the world calls upon us in order to actually do better. So I was called to serve on the Federal Reserve Bank Board. And at first I thought, what in the world? What do I know about the economy? What can I possibly contribute? But I've learned over the years that, you know what, I can contribute a lot, and that's what I'm here to talk about. So I'm going to talk a little bit about the Federal Reserve System and just, what is the Federal Reserve System? The Federal Reserve System was created in 1913 when Congress passed and President Woodrow Wilson at the time signed the Federal Reserve Act, which was a little over 100 years ago. And before that time, if you can imagine this, if you had a bank that was here in St. Paul and a bank that was in Marshall, Minnesota, and you printed up money, you couldn't make good on that promise necessarily. So the Federal Reserve Act helped unify the country and the central banking system. That was more than 100 years ago. And if you think about the brilliance of the Federal Reserve Act at the time, everybody was concerned about the concentration of power in a deeply centralized system, and So Congress decided that they were going to create this decentralized central banking system, regional banks, right? So that each local district could actually have ownership representing its local economy with real-time grassroots information about business conditions and how the economy was really doing. So the one thing that I wanted to clarify is the Federal Reserve banks are not government agencies. A lot of people think that they are, but they're not. Rather, each Federal Reserve Bank, like ours here in Minneapolis, is an independent corporation. And like other private corporations, it's managed by an independent board of directors. That's what we are. Now, the Board of Governors in DC, Chair Yellen and the Board of Governors, is a federal agency, and the chair of that board is Chair Janet Yellen. So the Board of Governors and how this all integrates, what we broadly call the Federal Reserve System, has oversight over the reserve banks, but each reserve bank is largely responsible for managing its own affairs, again, through its board of directors. So as president, Neel Kashkari has independence, an independent voice locally, and to contribute in many different ways to monetary policy. So one of the primary purposes of any central bank is actually to conduct monetary policy. But the structure of our system is really unique among world central banks because our decentralized structure, regional structure, allows all parts of our nation, which is very broad, to have a voice in monetary policy. I've found that that's fairly unique. I was just in the country of Laos, where central banking is not working very well. And it's really interesting how that economy is growing and how the strength of the economy is not necessarily being supplemented by the central banking system there. So I thought I would just show you what the Federal Reserve districts look like. This map shows the 12 districts with their main offices, and you can see that the Federal Reserve Bank of Minneapolis serves the 9th Federal District, and that it's actually a broad geography. So you can note that the Fed here has 2 offices in the 9th District. One is here in Minneapolis, and the second is a really small office in Helena, Montana, which I actually got to visit last year. It was very interesting. Because the Federal Reserve Act created and defined these boundaries over 100 years ago, they're still the same. So you have kind of like these idiosyncrasies. If you look at San Francisco, there was the expanding West, and it's just gigantic. So now you know a little bit about me, you know a little bit about the structure of banks. What do directors do? Well, as a director, basically I'm a person from the community services sector, and I was asked to be on the board of directors, and because each Federal Reserve Bank is independently managed by its own board of directors, many of our responsibilities are exactly the same as those of other companies, which means we're overseeing the work of the president of the bank, including responsibilities for managing the operations of the bank. This is a big bank. So there are a lot of key responsibilities. Some of the key responsibilities, though, are really unique to the Federal Reserve, so I thought I would talk a little bit about that. So one of my roles as a director is to receive information about business conditions from a broad range of sectors across the entire district. For me, because of the work that I do in the community, it's really around the sectors of the economy that often get missed, right? I mean, if you think about the mortgage lending crisis, if you think about common everyday Americans and the experience of the recession and how that hit the housing market and how it affected employment, that's my expertise, and that's what I bring to the table. I also bring a diverse set of contacts about the economy, and I inform the president of the Federal Reserve Bank, using the information to educate him, who then takes this information to inform monetary policy discussions in Washington, D.C. One of the things that I like to say all the time is that, research indicators are really good, but they're usually lagging. It's a view into the past, what actually already happened this last week or this last quarter. What directors provide is leading information, which is what's actually happening right now. So the leading information that directors give to Neel Kashkari here, real-time, on-the-ground economic data, what are people experiencing, even if the numbers say this, is really highly important information. So I try to gather as much as I can from my contacts, and then once a quarter, I make an economic report. And then we also learn from other directors who are on the board. The other thing that directors do is we actually vote on the discount rate. So the discount rate is the rate at which the Fed charges banks for extending credit to them. So the Federal Reserve System is the safety net lending system. So when smaller banks and banks are needing cash, we lend it out to them. And so, the rate, as you know, the discount rate has remained really low over the past 5 years, and it's really been a function of our economic conditions. And finally, like all boards of directors, we provide management and oversight of many areas of the bank, including officer promotions and appointments, as well as reviewing internal risks and internal controls. So if you can imagine this, our jobs are really important because we have to make sure that everything is hitting 100% of the time on all cylinders. That's what you guys as constituents and people who live in the 9th District expect, and that's what we expect from Neil. And that's a tall order. We can't afford to make many mistakes. Doesn't mean we can't be creative. We just need to do things well, especially with controls. So I'm going to talk a little bit about the structure of the board of directors because we also have, I think, a really good governance structure. We have 9 directors from 3 different classes. So I wanted to talk about each of the classes. So Class A directors are elected by member banks to represent member banks. So 3 of the directors on the board are elected by member banks. Class B directors are elected by member banks too, but they represent the public, which means that the people who serve representing member banks or the public are elected by member banks don't have to be bankers themselves. They're people from industry, okay? And then I'm in a Class C director seat, which is I'm appointed by the Board of Governors to represent the public. And most people don't understand this piece, but only Class C directors can ever chair a Federal Reserve Bank. So we have no financial interest. We're actually, we actually disclose about once a month if we have any stocks or anything in bank holding companies. We have no financial interest. Our interest is the public's interest. And we serve staggered terms up to 2 3-year terms. So I thought you might like to see this picture because it shows the structure of the board of directors. Now this is actually kind of a brilliant governance system if you think about it, because the member banks are representing community banks, right? They also get to elect other representatives and those are people from industry who represent the public. And then the tie back to the Board of Governors are the individuals who actually are in public interest seats, right? We're public directors. We can't own any stock in a bank. I don't know if I really like this picture of myself, but and there's some like really big photos right outside here of all of us, but I thought, who are these people? Let me just talk a little bit about who these people are. So you know me because I've been doing so much talking now for almost 20 minutes. There's really a wide range of different individuals. I'll just talk about a few of them. So the deputy chair is Ken Powell. He's the chairman and CEO of General Mills, a global food company. And then the other Class C director is Harry Melander, who actually is the president of the Minnesota Building and Construction Trades Council. He's a labor guy. He comes from labor, and that's the voice that he represents. And then, the Class B directors who are also public directors representing, elected by member banks. Kathy Nessett from Nessett Consulting. She's a geologist, happens to share an alma mater with me, Brown University, but she owns her own consulting company and is from North Dakota. Larry Simpkins, the Washington Company's huge company. But he's really into transportation and commodities and global trade, looking at global commodities. So he's often reporting on worldwide issues. I do the micro, he does the macro, right? Christine Hamilton with Christensen Land and Cattle. She also is into biotech firms, so she's actually giving us information about what's happening there. And then you have the bank of directors, Kate Kelly with Minnesota Bank and Trust, Randy Newman from Alaris Financial, and then Tom Armstrong, First National Bank of Park Falls. I always find Tom's reports the most interesting because he's from a teeny tiny rural town in the Upper Peninsula in Michigan, and he's always talking about paper companies, logging, natural resources, but that's his segment of the economy. So you can tell that we represent really diverse areas. And the reason why we need to do that is because it's really important to actually get the most diversity that we can about what's actually happening. So before I talked a little bit about how we have two branches, and these are the Helena branch directors. They serve in an advisory capacity to the main office and the board of directors here, and they rotate out of board meetings. Two of the branch directors are actually appointed by the board of governors, and then the other directors are actually appointed by our Minneapolis bank board. So let me talk for a minute about what does it mean to be a board chair. Well, first of all, this is my first stint as board chair of a Federal Reserve Bank, and I'm finding that it is a very interesting assignment. And you know, like most board chairs in regular companies or nonprofits, I run board meetings, and I make sure that all the important perspectives that directors have and that staff have, the work of the bank itself gets addressed in open, transparent conversations. And you know, I help make sure that the votes get counted right. That becomes really important because of the discount rate and because of the matters that we have to actually be dealing with for the public and for the bank itself. I also help lead the go-around discussions. So every time we meet, there's a key economic question that gets put out from staff here at the bank, reviewed by Neil and given to us, and we have to report on that particular question, as well as making observations. And then, you know, it's really, really important during the discussion that we actually have ample time for answering questions, Neil's questions, but each other's questions about what we're seeing in the economy. And so ensuring that everybody gets a voice is very important. The other thing I do is I manage the committee structure. So being board chair does mean that I'm managing the committee structure and making sure that the right directors or different directors are appointed to the right board committees. And I'd like to talk just really briefly about them. The executive committee is really the Class C directors, and the executive committee has some pretty special roles. We are actually authorized to take action outside of board meetings. We meet every 14 days by law and set the discount rate and listen to what's happening with the economy. The action's usually preceded by really a discussion, again, a review of economic conditions. The second committee is the Audit Committee. In terms of checks and balances, this is the committee that has responsibility for managing the bank's internal control and audit functions. And the committee reviews all the control processes around financial statements, compliance with laws, safeguarding all our assets, and the efficiency of operations. So to maintain the Audit Committee's independence, actually, the general auditor reports directly to the Audit Committee and does not report to management. The Budget Risk and Evaluation Risk Committee reviews the bank's budget on an ongoing basis annually, for sure, to make sure that we're doing good stewardship of the resources that we have. And then finally, the Nominating and Governance Committee makes sure that we are doing a regular review of our governance processes and nominating new people who could actually replace the Class C directors, which is a really important replenishment and transition function. So, you know, the other really interesting thing that I get to do as board chair is I get to attend the Conference of Chairs meetings in Washington, D.C. And listen to other directors. We also do economic reports there, but we're doing it for the whole region with key questions. We're meeting with the Board of Governors. And sometimes we're meeting with each other, which means that there are no governors present. The Conference of Chairs picks the topics and talks about really important things that we are seeing in our banks that maybe are not appropriate for the Board of Governors to be hearing about, or questions we may have for them as some checks and balances. And then the other thing that I'm doing, and sometimes this happens in the Conference of Chairs, different chairs are appointed or asked to take on leadership responsibilities. And there are 3 roles in the Conference of Chairs where there are leadership responsibilities. I'm in one of them. I've been asked to be the chair of the Committee on Employee Benefits for the entire system. So the other system-wide leadership responsibilities are being the chair of the Conference of Chairs and being the vice chair, and then being the chair of this committee. So this is really about ensuring that those charged with system-wide responsibility for employee benefits are that they're at appropriate levels, that compensation philosophies and others are at an appropriate cost. And I asked, last time I asked some kind of hard questions about, equity and distribution of benefits. My staff are used to me saying these things by now. But, even for a contribution kind of looking at across large systems, we should be asking ourselves certain questions. Okay, and then of course, one of my most special roles is actually helping to onboard and transition and support our new president, Neil Kashkari. And last year, the deputy chair and the chair of the Federal Reserve Bank here actually went through a search process. So as part of our managerial oversight role, because we are an independent bank, the board of directors does this special duty going through, we went through a very comprehensive search process for a new president. And Neil Kashkari began his role in January. I should note that, Class A directors are limited in terms of some of the functions and duties that they can do as banker directors. Being part of a search committee and actually helping to appoint or find the next president is really just a Class B and C director role. We also changed the process up a little bit in terms of increasing and generating public transparency around the hiring process. We did way more as a board of directors than any other board of directors I've seen across the system do, and we have set a new standard, I think, for transparency and what the process is. We conducted a nationwide search. We actually published a summary of desired attributes. We released educational materials and videos on the bank's website to actually educate people about the process. And we are extremely happy with the result. Neil is doing a terrific job. So that was a lot of information. You probably know more about governance of Federal Reserve systems and independent banks than many people in the district. And I am happy to help answer any questions that you might have.
Did I hear you say you do all this work and you don't get compensated?
This is a volunteer role, and there's like a very tiny stipend that gets offered up per hour or per engagement, and then I'm fully reimbursed for my travel costs when I go to DC. But this is all on my own time. Mm-hmm. So, when you're called to service, it's really important that you have the time to actually dedicate. And I thought this was really worth doing. And so, no, directors are not compensated for their time, and we don't receive a lot of money for what we're doing. Yeah, but we are made whole. Yeah.
How is the audit committee selected?
How is the audit committee selected? Yeah. The audit committee is...
And what is their role, too?
Yep. So the role of the audit committee is... So let me start out with who's appointed and on the audit committee. I mean, usually the chair appoints, the board chair appoints the audit committee chair, and then there's a review of, individuals who are part of the board of directors, appointing them to the audit committee. And then, the work of the audit committee is really to review all the internal controls, risks, and, the financial condition, all the things that you would typically think of that belong in an audit committee. The auditing structure is really very independent. The bank's auditor does not report to management. The bank's auditor, the general auditor, reports to the audit committee. And so there's an independence that gets maintained really outside of staff so that we can actually review what is going on and what things also need to improve. Yep.
Dr. MayKao, it's a really pleasure to see you out here representing the community. So I have two simple questions for you. The first one is, I'm an economist and I teach macroeconomics, and we teach about the discount rate. I'm curious to know, in the years that you've been on the board, mm-hmm. the role that you might have had in influencing a community perspective on where the decision would have been on the discount rate. That's my first question. And my second question is, when our new president shook the world a bit about his big idea about breaking up the big banks, what were you thinking as chair of the board of the Federal Reserve.
Oh, okay. All right. Well, so let me take the first question, which, if I understood it correctly, is, what influence have I had on discount rates, and what's my role in kind of contributing to that? I think that because our role as directors is to really be reporting and to be monitoring business conditions, the way that I've influenced first Narayana Kocherlakota and now Neil Kashkari is by giving real-world examples and information about what is truly happening in the community from my view. And then considering that, asking some, first, it's just questions for understanding about the reliable measures that we are looking at on an ongoing basis. Now, I bring a different view because I like research. And I'm looking at lots of different things. I think that my contribution has been more to, what isn't being captured in some of the data, and then in the real-time information that's being offered, and observations on a really individual and family level. So, my training is in public policy and in community work and in equity and social justice. That's what I've dedicated my life to. So I tend to look at some of what's being said from a policy lens, from a micro kind of individual family lens. And one of the most important things in banking, for example, that I know is household formation. If we don't have household formation, we're not having savings, we're not generating wealth. The economy is not doing as well as we think it would be doing. So my observations on the discount rate have been more about generational changes, been about household savings patterns, been about payday lenders. Like, I think I gave a report one time about, within a 5-mile radius of the Wilder Foundation, there are more than 10 payday lenders charging interest rates that are above 40%. What are we going to do? Because that's what we're seeing with our clients. So I think that's how I've influenced thinking, but also kind of informed, I would say, informed some thinking. A lot of the work that the Fed does, because it's on a big macro level, is really about macroeconomics. And public policy and my studies and my work has really been on the individual and family side, but that doesn't mean that I don't understand economics. It doesn't mean that that I don't understand that private enterprise and public policy are two sides of the same coin. So, I think I understand a lot more than most people think I understand, which is good, because I'm asking good questions, and that's one of the contributions. The other question about the president and, how he shook the world with this too big to fail thing. I had some warning that it might have been coming. I think Neil Kashkari, I think that he's doing a good job of articulating what many people think, but maybe have been a little hesitant to say. And, other Fed presidents have said the same thing. Now, one of the reasons why we hired Neil is because he's a very clear communicator. And he understands in a very practical sense, through all of his previous work, some of the experience of everyday Americans. That's also needed in the creation of monetary policy or the contribution to. So, it's to say, it's not really a new message. How it's being said is new, and how we're convening around it, I think, is fairly important. And so, I think that the problem has been defined, and the position has been aired or shared. And there's a lot of good attention, and that's good, because what we need is good public dialogue, good research, good conversation about what is actually happening, so that we don't end up in the situation that we have been in for the last 8 years.
Hi, MayKao. How you doing?
I'm fine. Hello.
Congratulations on a new job, President Kashkari. I'm glad that you're representing the community on the board, on the Fed board. We know that the Fed has a dual mandate, and it's a very macro level, and oftentimes that tool is pretty blunt and can affect different communities different ways. So I was curious, as a representative of the community on the board, what are the best ways for community members to engage in the Federal Reserve process? How do we access our appointed officials, and I guess the best way is to engage and have conversations and get the information out. And
yeah. So one of the legacies of President Narayana Kocherlakota was these events. He was really into community outreach and transparency and generating a lot more understanding. It's something that, frankly, we looked for in the new president. Someone who understood that we are stronger as Americans and as a banking system and as an economy if we are as clear and as transparent as possible about what we are trying to achieve and what the Fed's mandate really is. So I think it starts out with understanding the role of the Federal Reserve System. It understands, like, there are so many different engagement bodies with the Federal Reserve System. You know, I was actually really excited to come here tonight because I sent out to my social networks and others in the community because I am different than, you know, other people who are on the board. I'm a Hmong person, grew up in St. Paul, resettled when I was 4, speak 3 languages. The community is becoming more like me. And you know, it's really good to actually broadly distribute information to many people in many different types of industries to actually truly understand what we have, either in terms of public policy as a blunt instrument or in informing. So there has to be a two-way exchange. And so, you know, the thing that I, as a community person, see is, you know, it's really good to be cerebral in our heads. Like, I love knowledge and I pursue knowledge all the time and I love to learn. But there's a lot to be said for, as directors, coming directly from the community and saying, yeah, I know that that's great, but guess what? This is what's really happening. 22% increase in working families, 2-parent households who are homeless. And they're working. This is not okay. You know, so I think that that's the voice I bring, and I think that that has to be a two-way exchange. And, you know, it actually has to do with, like, the willingness of everyday people like myself to actually say something and to engage. Because we can't engage and change if we're not willing to understand, listen, and then use the tools that are actually available to us. And there are many different types of tools that are out there and available. Not just policy tools, there are education tools, there are outreach tools, there's a lot going on. And so don't be a bystander. Just engage and learn more. Mm-hmm.
I appreciate everything you've said. Just wondering, how does the 9th District get information or get feedback from areas that are not per se from Helena, Montana or Minneapolis? I very much appreciate these conferences, but obviously they're for the Minneapolis, the Twin Cities area. How do you get information from Bismarck, North Dakota, or Williston, North Dakota, or Lemon, South Dakota, or Aberdeen, South Dakota?
Yeah, so I'll answer the question from a board level, and then I don't know if someone from the staff, if you'd like to answer the question about other data gathering, Neil. So the board of directors, even though there's the Minneapolis and the Helena branch, we're from all over the place. So like Upper Peninsula, Michigan, and, you know, people who live near Williston, and so we try to find broad geographic representation. And obviously those directors are reporting from their respective geographical areas and sometimes globally. So that's kind of the coverage in terms of geographical span, and really trying to find, I think that there are 2 directors who are here locally, but, you know, even if your company is headquartered here, you're moving all over the world and in many different geographies. So I'd say that we cover a broader range and span in terms of geography on leading business conditions review than most people think. And then, you know, we do look at data from many different sources coming from all over the place. And I'll turn it over to Neil to help answer that question. Neil Willardson or Neil Kashkari, either.
Just very quickly, we have a specific community outreach department at the bank whose mission is to travel the whole 9th District constantly, getting data, hearing anecdotes, and bringing that back to us. And then senior leaders at the bank are also traveling the district. So I have one of my goals for my first year here is to travel all the corners of our district personally, meet leaders there personally to understand what's happening. And then we also engage with political and civic leaders in those communities. So every time I go to Washington, as an example, part of my job is I'm meeting with members of Congress and senators from the 9th District to hear firsthand what are they focused on? What are they hearing from their constituents? I'll give you an example. When I was in Washington for my first FOMC meeting in January, I met with both of our senators from Minnesota, Senators Klobuchar and Franken, and both of them said, hey, put very high on your priority list to get to the Iron Range. They're struggling, they're suffering because of commodity prices, and so I'm going to the Iron Range in a few weeks just based on their feedback. And so it is a constant effort that we have at the bank to get out all across the district and to make sure that we know what's happening and are bringing that back here and then ultimately to Washington.
I have kind of a tough question here. It's about reparations. The U.S. war reparations were given to the Japanese for the mistreatment in the concentration camps, and it was about $550 million. I wanted to know more information about, well, first of all, I did go on the tour, and I learned about how when Federal Reserve banks have an excess of a lot of money in the billions every year, it's given back to the treasury, right? Okay. And then that money is for the Congress to decide on how they want to use that. I am wondering, do you have any part of possibly influencing them to anything about reparations at all?
No. That's a complex question, and the answer is no.
So there's a pretty clear line between monetary policy, which is setting interest rates, and fiscal policy. And fiscal policy is where the Congress decides all of the tax dollars that we all pay as taxpayers. They decide what it's spent on, whether it's health care or education or defense or Social Security. So the money that the Federal Reserve puts into the Treasury Department goes into the bucket of money that Congress decides, do they want to spend it on education or, you said, reparations or defense spending. That's completely up to Congress, and the Federal Reserve by law has no role in those decisions.
You know, one of the things I've been really impressed by as a director and actually getting to know the Federal Reserve System is I'm maintaining the independence of the Federal Reserve banks and that perspective and being really, I would say, nonpartisan and making sure that independence is maintained is highly important. So we don't engage in those fiscal policy issues. It's not our role to do that. Yeah. Mm-hmm. Doesn't mean that we as, remember when I started, I said the views expressed here are my own and not the Federal Reserve System's. I mean, it doesn't mean that those of us who are serving here don't have our personal opinions. We do, but we're not. That's not the role. So, yep.
I have a question about the availability of credit for small businesses. The Federal Reserve, as the recession deepened, has lowered the discount rate to virtually zero, but the actual cost, if you have a credit card balance or if you're a small businessman going to a bank, has not followed that downward. The Dodd-Frank rules, which aren't set by the Federal Reserve, but they're coming, they've been coming for 7 years, so hopefully they're about done. But they are forcing bank auditors, whether it's a national bank or a state bank, to look with great circumspect on small business loans. So regardless of the race or ethnicity of a small business person, it's harder than hell to get a loan, almost to the point of being impossible. And one is left with the feeling that that's what the Congress of both parties intends it to be. The federal government set up the Small Business Administration back in the 50s. They've never funded it by more than 10% of the need. There are 3 or 4 legitimate local banks in St. Paul that are trying to make small business loans, but to a great extent they dare not do it unless they can put them in the SBA program. A lot of these small business people are right down University Avenue in both directions from your brand new offices, which my state tax dollars paid for, thank you very much. But, the Federal Reserve is like a blind elephant and has been for 50 years. They don't care about the average person. They're setting rates for the big banks. I don't know, you know, supposedly you're from the community, you social justice and equity. Do something, you know. Small businesses employ 50% of the people that work for a living in this country. And by strangling small business, we're assuring that most people, especially people of color or whatever that means anymore, are not going to have decent jobs.
So that sounds more like feedback for me. So thank you. Yeah, I heard you. Yep. It didn't sound like you had a question. You had more commentary and feedback.
What have you done? What can you do? The policies really are set in Washington. The ninth Federal Reserve is out in the middle of nowhere. Geographically, it's large. Economically, it's tiny compared to the big reserve districts on the coast. So when Chairman Yellen decides what to do, she isn't listening very hard to the ninth district.
Yeah, I guess I could just speak to that in terms of my my role as a director. Is I have received feedback like that from others, and you know, I think part of the being and coming from the community is to be some of that voice, to actually contribute what I can to you know, Neil's thinking. But you know, I don't have any comments about that in particular. I mean, I guess if Neil, if you want to say something, you can. But
you know, I would just say I'm a little limited in what I can say because we're meeting next week for the Federal Open Market Committee meeting, and so there's something called a blackout period, where for the week before the meeting, I'm not allowed to give any comments on the economy or on monetary policy. So I'm limited by what I can say. But I will say this: this is an organization of public servants. People here are. One of the reasons I joined is because I love working with people who are committed to public service, and you get to work with brilliant people like MayKao who are volunteering their time. And I just got to tell you, you know, I've worked in the private sector and I've worked in the public sector, and this is an extraordinary organization of people who are committed to helping all of our fellow community members. And so I think if you got, the reason we're doing this, if you got to see behind the curtain a little bit, I think you'd be really proud of the people who work here and how hard they work to try to help all of our community, all of the 9th District get ahead. And so I hear your frustration, and I'm sure it's justified, but I'll just share with you, we are working very hard to try to do everything we can to achieve the dual mandate that Congress gave us, which is maximum employment and stable prices. That's our mission, and I can promise you that we are absolutely dedicated to trying to achieve it.
Yep.
Thanks for your comment.
Yay, thank you. I think we've got time for one more question, and then we're done.
All right, thanks. Could you speak a little bit to the Class B directors and how they are chosen by banks and represent the public, and also kind of marriage the difference, it sounds like, between A and B directors?
Yeah, I think I'll let Neil, who's our governance expert here, answer that question.
Well, thanks, MayKao. I'm Neil Willardson. I'm the General Counsel and Corporate Secretary here. Yeah, it's a great question. So Class B directors, they can't be affiliated with banks. They can't be an officer, director, consultant, or employee of banks, but they are, under the Federal Reserve Act, elected by bankers. So bankers often have good community contacts, people that they think would be great members of the board of directors. But it's very clear that when those folks come on the board, they don't represent the banks. Instead, they represent the public. So that's that segment of the board of directors. And it's a balance that, again, comes from the Federal Reserve Act back in 1913.
Do you want to talk to the Class A directors?
Yeah, and the Class A directors are bankers that are elected by bankers, and these are folks that represent the member banks. They need not be banks, but they tend to be bankers, as you might expect. Bankers feel that people like them, bankers, would best represent them. So the 3 of the 9 members on the board of directors, rather, are bankers. Yep.
Great. Good. Well, I think we're almost at 8 o'clock, so thank you so much for coming. There's a reception, and
Yeah.
Neil, you're going to close us out.
Maybe just take a few moments here. First of all, thank you very much, Dr. Hung. It's really a great presentation, and thank you for taking the time with us. So.